going to talk right now to our man Steve Rhodes, as we do each and every Monday at 3:15, folks. And if you haven't yet, head on over to the front page of TFNN, right under the newsletters tab. You'll see Mastering Probability, Steve's daily newsletter. He's got morning updates, afternoon updates. And if you scroll down on that order page, folks, you'll see the many webinars that you gain access to. It's $149 a month. Every one of these webinars that Steve has in there could be $149. The ultimate reversal pattern, overcoming fear in trading and investing, the TD, mastering the TD setup 9 count. I could go on and on, but check it out. You get all those, folks, with his newsletter. It's outstanding. Check it out on that front page of TFNN. Steve Rhodes, good afternoon.
Tommy, how you doing today?
I'm doing well, man. How about yourself?
Good. I was just checking out that Chamber of Commerce weather in that St. Pete area. I see nothing but sun for like all the way through Thanksgiving.
You know what, Steve? So I was back in Boston, actually, late last week, okay? And, man, it's great to be back, in your hometown, of course. And we got some amazing weather up there, especially this time of year, like 46, 49 degrees, sunny, blue skies, beautiful, and a little chilly for Florida. But I come back here, and I was like, oh, my goodness, it's 82 degrees again this afternoon, and it's sunny. And I love that as well, of course. But beautiful, man. It is, for sure.
Yeah, it's a nice 82 degrees. Absolutely. Oh. So I thought what we would do today is just kind of maybe a larger overview of what I'm seeing. And in the first chart that I've got up here, this is a yearly chart. And the top row is the U.S. indices, the Dow, followed by the S&P and the NASDAQ. Just below the NASDAQ is the semiconductor index. The yellow lines, this is a yearly chart. So the yellow lines out there are the highs for 2024. And whenever you trade above a prior year's high out there, you're in a bull market, period. Now, it may top out, it may have topping signals and so forth. So you have to look at it. But what we can see here, and so then the other charts I've got the DAX, we've got the FTSE, we've got the Shanghai, the Hang Seng, and the Nikkei. And we're in a global, and I think I mentioned this to you a couple of weeks ago. We just didn't get to the chart, so I kind of went back through it, for today's segment. But we are at all-time. We are trading above the 2024 highs for all of these instruments, all of these indices out there. So each of these are in bull markets. And in other words, what I would say is money is flying across the globe, and it is just not concentrating in one single country, and therefore, because it's not concentrated in one single country, I can't say that it's the reason why our markets here in the U.S. are at all-time highs or because all the global capital is flowing here. It's not just flowing here. I think what I'd mentioned to you, my take on this is with all the geopolitics that's going on across the globe, what traders and investors are doing is they're investing in hard assets. And hard assets with gold, obviously, gold, silver, but it can also be companies, which is really what I think is taking place here. If we take a look at the Dow, so one of the things I talk about, as you know, is global capital flows, and that means I take a look at instruments that are priced in different currencies. This is the chart of the Dow priced in the major currencies. When I say major currencies, those that make up the U.S. dollar, the euro, the yen, the pound, the Swiss krona, the Swiss franc out there, but have also included the Australian dollar, the Chinese yuan, the Canadian luna is part of the U.S. dollar index. Well, it turns out that, so it's great when they're all moving higher at the same time, real bull market. They all also are going to top at some point in time. So I just caught just a little bit of the last couple minutes of your show, but I heard a lot of caution out there. I thought I heard some caution in your voice, and rightfully so. So when everything is moving up, great bull markets. But, man, when they all top on the same day, it's really a cautious tone out there. And it's not just these currency pairs. If I take a look at the Dow, and I'll go back to, but if I take a look at the Dow, the NASDAQ, and the semiconductor index, and these yellow dashed lines out here show that all of these are going to move lower basically at the same time. So we've got to identify. You can see at where we're at right now, I don't have a yellow dashed line out there. But I'm getting pretty close to putting one in, and you'll see as we take a look at these charts out here that we may, in fact, have some type of top that is taking place. Now, if you go back to 2000, where you see these little green lines, we didn't all top at the same time. The NASDAQ and the semis topped us a little bit after the Dow did. Now, if we review the weekly charts, because we were just on a weekly chart here for these three indices, if we go take a look at their weekly charts and we try to identify, is there a top signal in place? If we look at the Dow actually does not have a top in place right now. It needs a further rally. This is the C to D point. All these blue diagonal lines here, Tommy, are the C to D legs of that A to B. In order to be able to squeeze it in a chart so we can see it,
Sure.
Because they have to go back so far. I just thought we'd take a look at the C to D leg. So the weekly time frame for the NASDAQ 100 does have a sell to D point top. And the semiconductors, the same thing out there. It's just the Dow that doesn't. And the Dow needs a rally and then a bearish reversal candle to confirm that. So it's a little wishy-washy. But when I take a look at the monthly time frame charts, and that's going to take place next Friday, right? We'll have a half a day, is next Friday Thanksgiving or next Thursday's Thanksgiving?
It is.
Right?
Yeah,
next. God, time flies, man.
Oh man, so, right? It's gonna be December, man. 2 weeks. Wow.
Yeah. So next Friday is when the markets will close, and right now, we've got topping patterns for each of the monthly time frame charts. So we'll have tops out there, and if I take a look at the SOX. When we do get tops, what we typically see, for whatever time frame it is, their price will pull back to the offset and change line, one of the workshops that you had mentioned out there. And for the semiconductor index, that's at about the 60.79 level. If you also look at the very bottom portion of the screen here, this shows us where this is kind of the cadence of the market. It shows us consecutive monthly higher closes or consecutive monthly lower closes. If we take the lower closes out here, the normal cadence of the market in a bull market, which we've been in, are basically 2 to 4 bars. And we've just had a rally that's gone on for 6 months out there. So just to see a pullback, like you were talking about gold as an example, heck of a run. You're talking about some currencies. So it's just a normal, pullback. So the first level for the SOX would be this green oscillator and change line. That number is going to change, or it could be a 2 to 4 month pullback. And I think it's the latter that is more likely the case, but I don't know the outcome. I just know what to be watching for, what to look for. And really, the same can be said about the Dow. The Dow on a monthly basis is likely going to form a top. It'll be a Rhodes momentum indicator top. But to sit here and say, hey, Tommy, it's going to pull back to that green oscillator and change line, we can hardly make it out because it's so close, in essence, to where price is. Now, that's a level that if we were to close below, it'll tell us that we've lost its momentum inside the monthly time frame. And if we've lost its momentum, we could easily see, as you look at the bottom portion of the screen out here, a 2 to 4 month retracement. Maybe it's just 1 month, but I'd say more likely a 2 to 4 bar retracement out there. So if it's going to be 2 to 4 bars, it's not going to be a very Merry Christmas. But I do have to share.
Hopefully everyone's aware, like you're talking about, right, that they put a little away when this market's been doubling and tripling in price over the last X amount of years. It's just been a heck of a run, man. I think that's where, and I love your analysis, and that's where I think I fall as well. I agree, as in, man, it's just a heck of a run. We have a NVIDIA 5 trillion. NVIDIA, I think in the last 10 days, it went at one point, it was down 850 billion in market cap over like 5 days. Then it was up 500 billion in market cap. And meanwhile, the market has just been so impressive, and it's just a natural flow. And we haven't had a natural retracement outside of the few notable ones, whether it was tariffs, COVID, and the Fed hiking. Right? Yeah. Those three. Right. But boy, you talk about shaking it off in no time on all those, man. And yeah, so I noticed on that longer term chart you had, you could almost barely see any pullback of making that potential turnaround where we are compared to some of those prior pullbacks. And that's kind of, I think I said, where my spikes go up, right? Saying, man, I had to look twice and say, oh yeah, that's right now. It looks like we're still sitting to the tick high almost of where we are. Yeah.
Absolutely. And we got the same thing going on with gold. This, as an example, is a chart of gold. It made new all-time highs in all major currencies and all Middle Eastern currencies. Hey, Tommy, great to be with you. Have a great week.
You too, Steve. Thanks so much for the great information. Folks, check it out. Mastering Probability on the front page under that newsletter tab, 30-day money-back guarantee, and you get those webinars as well. Thanks, Steve. We'll talk to you tomorrow, man.
Take care, Tom.